let's also welcome on board the management of ICICI Securities. We have with us Vijay Chandok, the MD and CEO, on the show with us. Vijay, hi, good morning. Good to have you on the show. It's overall been a good quarter for you. Help us understand what were the key highlights, how the business shaped up across segments.
Yeah, thank you very much. Good morning to all the viewers. Thank you for having me on the show this morning. Indeed, it's been an eventful quarter for us. We've seen good growth, revenue growing by about 37%, profit coming in with a growth of about 61%. We've seen growth all around, equities, distribution business, institutional business, the issuer services, the IPOs, all of them have fired and led to this kind of a growth. The high point really has been the fact that the digital efforts that we unleashed early part of last year, that is continuing to gain momentum. If you look at our new account acquisition, that has not only gained massively 3x plus YOY, but even sequentially it has grown. So the momentum there continues to remain strong. Pipeline of business, particularly on the IPO side, also remains quite robust.
Vijay, brokerages have continued to stay in focus. They've participated in the equity market rally as well. The growth performance from them as well has been very strong. CDSL the other day reported its data points and they've crossed over 4 crore demat accounts. How is it that you at ICICI Securities planning to capitalize on this boon of new investors that we've seen from the start of the pandemic to now?
It's a great observation, and one of the calls that we are sort of veering towards almost certainly now is that perhaps it's the beginning of a new structural trend in the industry that we are seeing, and this structural trend is the coming of the new age newcomers, tier 2, tier 3 cities. We are seeing lots and lots of them flocking to the markets. If you look at the demography segmentation of this profile of what I would call digital natives, these are the young Indians coming in the 23 to 26, 7 age bracket. We have close to 1.5 crore such Indians coming into economic India, so to speak, every year for the next several years. And they are inherently, so digitally connected. So, and unlike perhaps the earlier generation, they are actually very comfortable doing transactions digitally and also investing into financial assets as opposed to purely being hard assets or gold. So perhaps it's the beginning of a new trend, and given the fact that they are wired very different to the earlier generations, you have to be present in their format, in their sensibilities, in their life to make a mark in that segment, and that's precisely what we are endeavoring to do. Digitization is only one step, but I think it's going to be a lot more going forward about how you personalize to embed yourself into their lives, and that's the sort of direction of thinking within the company to capitalize on this. We believe it's going to be a longish trend, so it is worth the investment in this space.
Vijay, how much of the business uptake do you think is cyclical in nature? When I say cyclical, activity in the IPO market, activity of what is, let's say, happening in the investment banking market, these are deal-specific markets. And some of the so-called sugar rush may not continue in the second half. So what happens to the fee-based income then?
Of our company, we are 85-50. 85% retail, 15% institutional and issuances. Strategically, going forward, value drivers for us are going to be retail. Right? This is a business which nicely feeds into some segments of our wealth business. It's a business where we are very strong in, but I completely agree with you that that business tends to be episodic, and that's the nature of that business. You can't run away from that fact. But the value drivers for us really is the wealth and the retail, which is a lot more sort of granular and a lot more stable. Already 85%, depending on the year, between 85 to 90% of our total revenue and profits. So value is really coming in, and that's a huge area of focus for us. So, irrespective of how the institutional side of the business goes, our lookout is really on how we keep enhancing value in that retail and wealth segment of the market. And I'll share some very interesting data with you. We looked at ICICI Securities over the last 10 years, which is the period even prior to the listing. And we have a very interesting sort of a takeaway from there. While the general belief is that this business is very cyclical, if you were to look at our profit growth from 2012 right up to 21, and you divide them into blocks of 3 years, right? 12, 13, 14, 13, 14, 15, and each of these blocks, going right up to 20. There has not been a single block of 3 years where the CAGR has been below 17%. It's a decadal performance, right? And during this decade, you've seen ups, downs, difficulties, pandemic, all factored in. So, yeah, you have to look at this industry in a slightly medium-ish term view, a 3-year perspective. And 3-year perspective, this industry has not let you down. So, in between quarter to quarter, there would be cyclicalities that you have to contend with, depending on how the market goes, indeed. But from a company point of view, from a way in which we are driving our strategy point of view, A, increased dependence a lot more on retail and wealth management, which is a lot more granular and stable. B, even within the retail and wealth management industry, we are diversifying and granularizing big time. We are moving not only from into equities, but within equities, we are actually texturizing our revenue. If you look at the equity business for us, it's only about broking. There is a lot of subscription style revenue, which is linked to services that we offer to enable customers, get research access and so on and so forth, MTF funding and so on and so forth. And that cohort has become 25% of our total equity revenue. That's a lot more stable, right? And outside of the equity revenue, distribution business, which tends to have more stability. We've gotten more actively into distribution of insurance products. We, in fact, broad-based insurance partners recently. We've also gotten into distribution of loans in a more active way. And with loans becoming more digital in fulfillment, I think
fair point, Vijay. I'm just bringing the obvious risk out. How much of your business is purely dependent on the bull market versus bear market cycle? In a bull market, there's a very nice line which I would, more like a Dalal street line. We say that Teji ka bol bala, mandi ka muh kala. Just for the benefit of our viewers, I'm being bilingual here. That when in the bull market, everything looks good and the brokerage would be high. In a bear market, it's the reverse. So what I'm trying to understand from you is that you build an organization which is built to last. But any broking business goes through its whole bull market and bear market kind of a cycle. Is that the biggest risk for your investors?
From a quarter to quarter perspective, yes, that would be a risk. The various steps that I just spoke about is to sort of minimize those risks. You can't run away from the risks of being in business, but you can certainly drive strategies to minimize the risk, and that's the end goal. Quarter to quarter, yes, that would be a risk. But again, as I said, go back to the last decade where we saw what we just described in a very poetic sense. We did see a 3-year stack of continuous 17% plus kind of a CAGR. Which is quite interesting to sort of take up.
Hi Vijay, good morning. I think you mentioned earlier that you foresee, a crore and a half roughly of Indians entering the equity markets, retail investors, of course. But while, of course, there's tremendous potential over there for ICICI Securities, these young and new investors are also spoilt for choice. You have so many options available out there. You mentioned differentiated and, more customized service for these investors, for these, new investors. How will ICICI Securities defend, gain its market share?
So let me just clarify what I just said. I said 1.5 crore Indians coming into economic India. A share of them each year of the newcomers to economic India would go to the equity markets. Of course, there are people who are already existing in economic India the slightly older than 25 and 26, who will also come into the market. So I'm only merely referring to the new entrants into economic India, which is 1.5 crore. I hope that clarifies the point. But again, your point on what's point for choice, I completely agree. There is a lot of competition in this segment, and therefore today, if you look at what the industry players are offering, it's largely treating customers as a unified mass, giving them a great experience, simplified experience, and low price. That's what is sharp, smart execution at low price. If you really, given our experience in this industry, there are lots of segments and sub-segments in the market. And today, technology, our developments in analytics, machine learning, artificial intelligence has enabled us to use all of this very imaginatively and personalize at scale. So we believe that going forward, it's not going to be only about low cost execution, but it's going to be about low cost personalization. So like I said, you have to reformat yourself to become very, very relevant. The young Indian today is saying that I just want to pop up a selfie on my and tell the world that today I earned X amount of money on my investment. I want to follow people. I want to share portfolios and so on and so forth. Nobody gives those capabilities.
So going forward, Vijay, what will be the key growth drivers for ICICI Securities? Where will you focus on going forward?
So like I said, ICICI's focus is on wealth and the retail equity. We've identified three clear segments of focus for us. The one is what we call the baby boomers. This is the segment which is typically the late 40s onwards. This is the segment of population who have a very differentiated need, managing their probably post-retirement life and diversification of their massive wealth and so on and so forth. So that's one sharp area of focus. The mass affluent, which is bread and butter business for us, which is the Gen X, Gen Y, the middle, the India middle. There it's about personalization at scale for us. And then you have the young Indian, which is the sub 30, which is again, like I described, the growing cohort. They think very differently, they have different needs, and it requires a different kind of an approach to them. So these three segments are going to be areas of focus, and there's a very clear strategy driving the senior segment, the middle India, and the emerging India.
Well, we leave it at that, Vijay. Thank you so much for joining us. All the very best.
Thank you so much for having me on the show.